Great and beautiful morning and evening to you all, wherever you are joining me at this moment. Welcome to 429 edition of Investdata Trading Academy live with Ambrose. Yes, I'll say that the global market, as we speak, is mixed. I think that some markets are opening in the south direction, while others are looking northward. As a lot of what investors looking at what will drive the market in this remaining days in the half they have the first half of the year. These are the factors that are also driving this market across the globe. The good news is that majority of the market in the world are in green this hour, which is a good news, while others are still responding to one negative or influence or what to negative impact or one negative word economic data or the other. That it tells you that as an investor, you must know what is happening around you at any given time. What are the factors happening in a specific sector or in a company or in the economy generally? That's why when you see economic data, it sends a lot of signal toward to the market. How the individual in the market or market players interpret this data and also make use of it in terms of a reaction. That's why you see different psychology or different sentiment in different markets due to what interpretation, how they see this word data as it comes around. That's why you, as a trader, any market you are trading or investor, must understand what is happening in that environment. That will help you to make more informed investment decision. For me, knowledge is what we need to invest profitably in the market, no matter the market cycle, whether in a bear, in a bull market, in a market that is trending. Knowing the direction of the market is not enough. But what are the factors, forming or kind of shaping that market in that direction? You are seeing an up market. What are the factors behind the up market? You are seeing a market that is trending. What is factor behind a market that is also in the downward that trend? You must know. Yes, as we speak now, if you look at Asia stock, I think Asia stock is missed at this hour as a lot of what more no clue to what if Fed will doing come September. Actually, before now, the most of the the Euro countries or let's say EU have also given a sign that they are starting what rate cut in their June, which is this month meeting, especially by the ECB, so European Central Bank, and also Canada, Central Bank, and also others, like what we are seeing in Australia, but like almost are likely to start, start doing what called loosening in terms of monetary policy. Well, how it's going to affect their economy? Because most of them have said that the high interest rate and high inflation has also kind of contracted the economy, have made the economy to remain a bit what on a static, not moving. But those that understand the importance of rate management and how it affects the economy, I would always, despite that the inflation remain kind of very sticky at this period, whether it's going to continue or not, most of these central banks are looking at this inflation movement. But in Asia, like I said earlier, we are seeing that the market in Asia are missed right away, and stock there in that market also missed. But because of what we saw a deep, decline, or what we call deep in terms of stock losing value in Japan and in India in that zone. We saw because of in India when the results were just about to announce or counting is going on. Most of the market players have seen that the incumbent government might likely not take up it in the next government. But that also changed the face of that. Don't forget that election and political politics as a way of influencing investment decision. That we have seen a kind of a sharp drop in that India market. What that of Japan? Japan, yes, Japan, they're not likely to hike rate in their next MPC meeting, but because they are factoring in what the rate hike, or the rate, the wage hike, sorry, the wage hike, or the wage data has also sent sentiment that we're seeing that market also looking southward as we speak now, because investors are factoring what will be part of the hike in wage, it's what we like inflation, and also they are also not to hike interest rate in this their meeting. These are things that is shaping market in that in that zone. But I believe that all eyes are still on what on rate cut in the eurozone to see how it's going to also impact all this market. Don't forget that the Asian market most do more business with the Europeans, which is the EUs and all those stuff. But let's see how it's going to go. But why in US more eyes are still on data, knowing that the data that are coming from US are still missed. That's telling us that yes, the economy is still not really where it's supposed to be. And don't forget, when there's high, interest rate, the active of still in the economy. But the Fed has said their eyes is still on what on 2%, of inflation. Is it dropping further? This is why I said they are starting to see like either 25 basic drop from September. But this data that just came will give more, insight what they'll be doing as we look forward to hear from most of the policymakers in that Fed, committee that will give more information on how that they will go. But like I said, that apart from Asia market are still mixed, all eyes are still really coming up on the non-farm payroll. That data that are coming up this week will give a clear direction on what will happen. This is also a major thing that investors are also looking at as we speak. Even when other regional markets or regional stocks are tracking some strength on Wall Street following the overnight gain that they saw after some correction or profit taking or pullback or negative. We're seeing the market coming back in this most of this mature economy. That's why we're seeing that market is trading what is happening, what is happening in US. But you look at Australia, as mentioned earlier, despite that the GDP came weaker than expected, less expectation, I mean, that is weaker than expected, but still not a negative one. But that's why that we know that the impact of high interest rate and high inflation has also played out on the world. See, stock in that market or also are looking up at this hour. For me, it's not a bad one. I mentioned India earlier. India is still what in that direction because of what? Because of the outcome of election in that environment. But if you look to what is happening in Europe as we speak now, Europe stocks are in green. You can see that Europe stocks are opening in a stronger green this morning. I will not tell why, because all eyes are still on data and also the news of the expected rate cut that will continue, that will commence. Sorry, that will commence. Come this week as the ECB is having their the policy meeting. That's also part of what is also seen that the attraction on stock, I think, because automatically when there's rate hike, I always say that the stock market will super well. When also rate cut, someone will also benefit from knowing that once there's a rate hike in that eurozone, most of the fixed income market instruments will become less attractive. Then and also it will boost also company activities, also economic activities that will make the companies in that region to do well, and that also have a work in reflecting on their earnings, which price feed on what. That is why you see when the news of rate cut to come, you see there's a way, it change the sentiment in the market. That's what we are saying in eurozone right away. For me, it's a good one for us to note at this hour that is what's also changing that that sentiment we are seeing. Good one for eurozone. I believe that more of this will come when it become clearer where the major one Fed is going. But once we are seeing other big market like Europe going through that rate course, and also like Canada and others, we might likely see before September why Fed also go in that direction, because we are seeing that the crisis of political tension or the geopolitical tension around the world has slowed down economic activities. And also, we can see what is happening in oil market, or called the commodity market, because of what the increase in U.S. Inventory, at the same time, the fear that whether OPEC was going to increase supply between now and end of the year has continued to weigh down what oil price in the market. As now, oil is almost testing 4 months low. For me, it's a good one for the economy so that it can get access to the board. For those oil producing economy like ours, a lower price also will send some signal that yes, either things are not working right, or that for about that investors are looking at where can they make good money at this point. But I believe that once this oil price remains stable, that also help the economy of different nation. Why? Because cost of heating up, or cost of business, or cost of fueling all also naturally also slow down, and that will be a plus for the market. I believe that these are things that is good. But like I said, the European market is on the grid. Good one, rebound from the previous day, less loss position ahead of key regional activities data that will come. Investors also are with like I said, the latest policy meeting, what will come out of it, and to give. But I believe that the purchasing manager index will also be due before the meeting. I mean, before Thursday. There is the meeting coming up today. I'm likely to see that will give you more insight what is happening in terms of economic activity. Don't forget that Germany is a major big economy in that zone. Whatever happens is a reflection of what we're likely to see another economy in that zone. But I believe that since the policymaker at this coming ECB meeting are likely to work on bringing down rate, that will also reduce cost of borrowing, that will further boost business. All eyes are on what on tomorrow meeting over there to know exactly where they are going. There's no cause for alarm. Honestly, that once you understand all this, also one of the retail companies in Eurozone also released a very impressive number, Q1 number, not to the market to show that yes, even a fashion business, this is one of the biggest fashion listed company in that zone. It's called Inditex. Inditex, impressive Q1 also was also part of what is influencing positive we're seeing in that Eurozone as we speak. We quickly flip to see what is happening in US market before we look at quickly on Africa zone. Then before we now quickly jump into what is the market here doing in Nigeria in terms of economic data. But for that, we also look at what is the figure that was released recently to the market. Was it telling us, especially number that came from FLOURMILL, Nigeria, and HONEYWELL? These are in the same family. These are also into consumer goods activities, to manufacturing sector. What is the data saying, and how this earning is going to influence decision in that industry, and also in a particular company that we want to look at? That's why for you, I believe that this 20 to 25 minutes live class will give you insight what is happening in the market. We know that yes, no data for one, we have seen how it can move. But coming to our local market, let's quickly look at what is happening. US, as we speak now, US market also open in the green. We're seeing that it's pointing also northward as a rate of what market expecting that a clue will come with all eyes are still on data to give an insight to what is going to happen in the next Fed meeting. That's why we are seeing that in that zone, we're seeing that market is in green in following a positive session on Tuesday. This is a good one. I think that as the market also digesting data that is released so far in the market, I think that labor is slowing, labor demand is also slowing down. In this economy, that will trigger what that the Fed chairman will see, is the economy really strong or not. As I said, I've seen a mixed economic data in US. I believe that that will also guide what Fed will do in their next meeting. But good news that Wednesday market in US has opened on a positive note, as well as I see on more key labor market data this week to give more. As I said, all eyes are still on what on non-farm paid road, so that when this thing comes, it gives insight of what's going to happen. But softer than ease also will later give, if there's easing in labor demand, that also make the kind of projection and also guide Fed what to do. These are the things that market are also waiting to see all those data ahead of Fed meeting. But all eyes are see that Fed are likely to their next meeting either next week, likely to leave their rate unchanged to see all this data payment out to usher in rate cut. And then that rate cut is what all eyes are expecting that to boost also economic activities. We're also seeing that Samsung share price also one of the spark also that boosted US market as the Nevada also have shown that they are going to source their artificial intelligence chips maker from Korea, and that also Korea firm is also part of what is going to also influencing that market. For me, it's a good one. But don't forget that in China also that the service activities also grow more than expected, despite the manufacturing sector is still dragging feet. We're seeing that that's the purchasing management index for that, which shows that yes, there's improvement. That means we're seeing a kind of continuous stimulus in that environment from the government in China, benefited the economy benefiting gradually, but not all facets of the economy, but some sectors. That I said, you must know that government policies or government input, which sectors are going to benefit from it immediately, even when the whole economy, as to speak, in Nigeria is not benefiting. Which sector will benefit from either the monetary policy or fiscal policy of the government? You need to keep your eyes on them. And while oil price, I've said earlier, is still what is still oscillating, but still, I tell you, it remain around what 4 months low. A lot of what increase in US inventory and doubt or kind of fear whether OPEC are going to increase supply of another thing that's very concerning is that global demand for oil is still very weak, not as strong as before, because of what high cost of business and as a result of a high interest rate. These are the things that when there's rate cut, that will also boost demand for what for crude oil, demand for crude oil could also going to impact on what on the crude oil prices going to the future. But let's keep our finger crossed as investor as we not see what as the market play out in this regard. But before we quickly go into looking at the market data, let's look at the numbers that were released to the market recently, especially looking at what has happened. The numbers from FLOURMILL. If you look at this number here as displayed on the screen, you can see that the top line, which is the revenue, and also the bottom line, which is the profit after tax, you can see that there's a mixed movement here. We saw about almost 49% growth from 1.54 trillion to 2.29 trillion. You can see that FLOURMILL remain in the club of trillion company in terms of revenue. It's also a good news for FLOURMILL, but because of high impact of this FS issue, I think that most of the companies in this sector for consumer goods are being hit by FS losses, and that has also a plague of what FLOURMILL and that of HONEYWELL. We have seen it in other results that were released before now. But for me, the good news that this did not hit FLOURMILL to the extent that it's affecting their shareholders' fund. That's why you can see that at the end of the day, they're able also to give some dividend to shareholders. But all eyes are on government policy and CBN commitment to do that this FS stability comes so that companies can plan with can plan so that also import raw materials. At the end of the day, also government also to encourage backward integration in this big company to see exactly what is happening there. It's very, very important that we put all this work into government and good thing that we know so that at the end of the day, investor will be in for return. If you look at the revenue, you can see, like I told you earlier, I moved from 1.54 trillion to 2.29 trillion. That after cost of sales, also in trillions, we saw about almost 1.4 trillion to almost 2.2 trillion again. In terms of, you can see that cost of production or cost of fund, all that also plaguing the world, most of the companies because of what. Even when you are into another market, to expanding market, for cost of doing that is also on the high side. But at the end of the day, we are seeing that the FS and increase the cost of finance as also when I mean finance, interest in borrowed money from the banks and others, and also the FS loss have kind of increased the finance cost from about 87.2 billion to 208.82 billion. You can see the kind of impact that also eat up what the profit after the company also have factored in a tax of almost 4.2 billion to around 3 billion in the previous year. At the end of the day, we're seeing that the profit after tax dropped from 29.5 billion to 3.5 billion for 2024. At the end of the day, the company is posting an earning per share of 6 kobo against 7 naira 25 kobo posted in 2023. And at the end, we're seeing that the profit margin is off. But even in the previous year, the profit margin from this company has been chosen at a cost also eaten, and also companies to work on their cost because their profit margin has shown that what they are realizing after cost as profit for investors is very, very low. They need to also work on their cost. At the end of the day, the book value of the company still stand around 57 naira against the 54.59 in 2023. For good things, I think that they are still rewarding the shareholders with 1 naira 80 kobo against 2 naira 25 kobo in 2023. Yes, you can see that their earnings are dropped, but good thing that it didn't affect their shareholders fund. And also now they are also going to put money into their reserve to pay to reward shareholders for having faith or confidence in them. But we can see that the impact of policy or the government is also plaguing this sector, which the government has also to retain in terms of their policy. Also, if you look at the cash flow of this company also, but I tell you that looking at the profit and loss account, it's not enough. We must also look at what is the cash flow of this company to know exactly where they are going. Because when a company cash flow is looking up and it's looking up, that gives you a good confidence that where the company is going. But when it is in another direction, it becomes a problem. We have seen their performance in terms of earning per share and all those. So let's see what the cash flow is saying. It's very, very important that you also know it. Like it will guide you as a trader or investor to see if you're expecting to see more results from this company. What are you going to expect? At the end of the day, you can see that the net cash operating cash that comes up about 160.8 billion against 98.93 billion for 2020. For me, it's also looking up. This is a sign that yes, well, there's scope for this company if we can see stability in the FS, and also because of the what we call the multiple product line or activities of this company, we can see it reflecting on their performance. That's why you can see top line moving by almost 50% is a good news for the company, apart from the cost and of cost of borrowing, because already when there's high interest rate, cost of borrowing will be increased. Also coupled with what with FS. So I'm not making excuse for them, but we know what the manufacturing sector are feeling, the resetters are feeling right away. Yeah, quickly look at what is happening in Honeywell. Honeywell number also. I see that Honeywell also put a missed number, but I think that of FLOURMILL is far better than Honeywell. Honeywell for many years have not paid investors dividend. They continue to post a missed number, and also even since the acquisition was done by FLOURMILL, we have not seen anything turning around. But this good that yes, they are still in operation, they are still going concern good. But you can see that the top line of Honeywell also is up by 28% from 147.4 billion to 188.3 billion. That's about 28% in the green. While you can see the huge loss here as a lot of FS loss. Also, if you look at the finance cost here, which part of the FS loss, you can see that from 14.2 billion to 36.1.3 billion. Also, you can see it here as I'm doing my and at the same time you can see that this translates to what a loss of almost 10.1 10.1 billion against 256.1 million naira gain recorded in previous year. At the end of the year, we are seeing a loss of any per share of a loss of any per share. For me, it's not this not that is what we call a loss per share. That's also about almost 1 naira 30 kobo. For that, for me, you have to also play with wisdom. This kind of stuff that there's no reward. Also despite the impact of FS loss, it is not the first time before the FS loss. But not this company have been struggling. But this also can see the impact of government policy on the sector where it operates. That's why I said policy direction is very key when you are looking at any sector or companies that you want to invest. Now that we are seeing what's unfolding in government arena and with their policy, yes, that's why for the coming master class, we're going to take the speakers are going to take time to tell you who said they're going to benefit from what is happening today. If finally at the end of the day, government have settled to pay pay 60,000 or 90,000 or 100,000, what will be the impact on the economy, inflation on that part? But apart from inflation, what will be the impact on the other side of the economy? Which sector is going to benefit from it? That now we'll also be discussing in the coming master class how you can start taking advantage of it between now and the end of the year. How it's going to change your investment, even when inflation is still on the high side. How is this high going to also influence also the physical market? How also we're going to expect interest rate coming down. Also, when interest rate come down in the midst of where we're seeing increase in earnings, what's going to be on businesses? These are things I'm going to be discussing so that we have to be ahead of the market. That's why the masterclass is coming on the 29th of May, the last Saturday of June. On 29th of June, not May, sorry. That is coming out that last Saturday of the month of June, the month we are in already. That is why you have to prepare yourself. You need to stay in that class to hear the expert give you, the complete strategy how to play, even to play the alternative market also to be shared. All those what you should be watching out in any market as market open. They will also tell you, because I tell you the ability of you to move from one market to the other will also help you to make, but not to trade often. It's also what we want to advise. Because most people that trade often, they get African bond. You must see where the market direction is going. You must see the face of the market. You must see what is happening in the industry sector or individual store before you jump into the market. You make money, but don't trade always that type of that. When you trade always, you must get your time to get your finger bond. That's why you must understand the trend, where the market is going. Like I said at the beginning of the class, if the market is oscillating, it's moving the uptrend, there's part of behind it. Market is pulling back, there's part of behind it. When market is trending, there's part of behind it. You must understand all these phases of the market so that you can make what informed investment decision. Yes, because of our time, quickly go to the market to see what is the market data saying right away. I'll tell you that market as we speak now is still maintaining a correction mode that started on Monday. I saw it on Monday as we speak now. That trend has also continued as we speak. I think that the market is also in the red. Right now as we speak now, market is in the red. Why is in the red? Market is still on the southward. Market is doing 98,971.52, down by 97.50, representing 0.1 in terms of percentage. Then if you look at the market rate remain negative. We are seeing 12 losers against 6 gainers in the market. The market is still on what we are seeing that sellers are still in control because of profit taking. But nevertheless, let's see the top gainers. Look at the losers chart now. You can see that Owando is leading that pack by 9.9%. I'm not surprised Owando profit taking, but I tell you, this pullback is opportunity for those that are designing, especially for traders. We're going to see an uptrend again in this stock. I have to also play with wisdom. If you're taking profit, know why you're taking profit and also how to trade profit and see that there's still other upside potential for the stock if what you're expecting happen at the cost of the month. Yes, after that, you can see that fixing is the next there on the chart, by 9.7% down, followed by linkage assurance. We'll see what peak, which is the coronation insurance and regency insurance. These are the top 5 losers right away. For Nigona start, we are seeing that the Champs is leading by 5%, followed by Massad 3.1%. We are seeing the Omatech and the Sunu Assurance and UBA. These are the top 5 gainers right away. But in terms of activities, I think about 48.5 million shares have been traded right now in the stock. Why we're seeing that the Betra Capital is still about 15.4 million shares traded. Price has dropped marginally. You can see that it's trading around 168 kobo against 99 kobo that we saw it closed there yesterday. Marginally like 1 kobo down. Followed by Guinness. Guinness have traded 10.1 million shares. I think Fidelity traded at 9.6 billion at 9 naira 45 kobo, and GT code flat at 40 kobo, 40 naira traded 8.3 million share as we speak. Yeah, quickly look at our chart because our time is fast spent. We'll look at what is happening in our chart to see. Yeah, looking at the chart now, you can see that the market is still very, very dull at this hour, and I'll tell you that because of what the trend that we're seeing so far is not too palatable. You can see the trend here. So I need to zoom in. You can see after Friday, market shows sign. I tell you, whenever you see this sign, an uptrend, it shows what a sign of. But when I was saying that this week, likely to see the market correction, profit taking, we think that I was guessing. I'm not guessing. I see whenever you see this kind of symbol or what we call candlestick on an uptrend, is a sign of reversal, and that's why any pullback here is going to be an opportunity for people to buy more. You can see the trend for Monday, Tuesday, Wednesday, market has been in that trend. And you can see that also. You can see it here. That shows that market is correcting, little correction before. I believe that I said it at the beginning that we're expected to see a missed June. June is the last month of the quarter, the last month of the first half of the year. At the same time, the month that will usher in the second half of the year. For me, I believe that investors will not panic or take advantage. Especially we are seeing insurance company number standing, and those ones that have the factors to further rally. It's where you should put your money in insurance company. Banking stock, for that yes, as well, they are preparing for their market activities, and all us that say what would interim dividend look like this time, and at the time what will their full year dividend look like. That also points you to where you put your money. I mean, in the coming master class, all this will be kind of breakdown and techniques to look at. What you look at your technical analysis or your technical indicators, all will be breakdown at the class. So that's why you have to wait forward to see you in that class, so that you also position for the second half and the third quarter of the year. It's very, very important that you take action. You don't wait to see others are following. You have to be where others come, they meet you already in that position. That is why you should make time that you're on the master class session on the 29th of June, hopefully by God's grace, so that we'll share what will also help you make money in the new month and the new quarter, third quarter and the rest of the year. Yes, let's call 2 indicators before we call it a day, because our time is fast spent. But we have to look at 2 stocks, look at the market, looking at the indicator, then look at 2 stocks, we quickly call it a day. Let's quickly look at these charts together. You can see for yourself now that the market is already already on the. If you look at this chart I've shown you before, that the market is slightly on top of the C line. What does that tell you? We'll see like that. Can see once it breaks down, that already was seeing that the market is pulling back, but without confirm real weakness in the market once it is below the T line. So let's see that by end of today or tomorrow, reversal, because that is closer all the way from your market is coming down, approaching T line. How to look at all this is very, very important. For MACD remain positive, but while money flow is already looking down to reflect the pullback, which is good. I tell you that funds are leaving the market. A lot of profit taking. That's what you can see here. The market is looking down at this one. Quickly on 1 hour chart, what is the market doing right away now? It's very, very key. It's very, very important that we know it. On 1 hour chart, market is below the T line. MACD is bearish already, and one money flow is looking down to reading the 28 below 50. You know what that says. You see it is for short term time frame of 1 hour. Look at the also 2 hour chart, almost the same thing, slightly below the T line, but that confirm MACD is bearish now, and money flow is also looking down to read what 47. Finally, look at what 4 hour chart before we look at the last stock, to call it a day. Look at two stock here. Look at Owando and also look at the Mansard and Chance before we look at it to see quickly what is happening. And you can see that market is flat on the T line on 4 hour chart. MACD is still not confirmed a very situation, but money flow has given looking down to read the word 66%. This is what 0.9%. I mean, that is for the market. Quickly look at Owando here. Look at the Owando chart. What is the Owando chart saying? You see yourself what the chart is saying now. So Owando, yeah, you can see that the stock has moved as high as almost above 1420 and see where it got to. But don't forget that this is the peak here. They will sustain that was tested. There was a breakout of this sustain posture, and I believe that the Owando has the capacity, but you can see the volume this morning. The market is profit taking. Speculators are hitting the stock now, but there's still potential for this stock to rebound. That means if you are in, you want to take position, I think this is an opportunity to know what to do right away. But as more information comes from Owando, already we have seen that Owando have been lifted. The suspension in the US, South Africa market, the US market have been lifted. Yes, that means are they telling that they are born again? Are they born again? Right, let me use that language. Will they be consistent? That means also Nigeria investors also have to feast their eyes on Owando. If they are consistent, and also don't forget that Owando is in a position that to do better. Look at other in that same business, how they are working strong in different capacity. We expect Owando to do that. That means for me, this pullback reward is an opportunity for those that are designing to know what to do. You can see the chart of Owando, and this is for 4 hours. Let me look at the 1 hour chart. What is Owando doing? The same pattern we see. I can see a pullback rate of profit taking in the stock. But if you look at the price now, I think the stock is around 13 naira now, 13.40, 13.50. That you can an opportunity for you to look at it. But despite the money flow, it's a result of what the profit taking in the stock, right to speak. Quick one, look at what is happening in Mansard and Chance. Because of our time for the God. Yeah, you got no one that they're calling me. Let me look at only Mansard. There's no time for Chance. We do Chance on Friday, hopefully by God grace. I see that Mansard trying to pull back below the T line, but I see the sign of resistance in 1 hour chart. Okay, in a day, that is a day chart. Let me look at 1 hour chart for the stock. 1 hour chart, I see that it's trying to resist a decline. That is a good sign. I can see also MACD is also looking up here. Once I see this histogram here, then our money flow is also looking up to read it. For me, there's possibility that this stock will rebound and surpass all the price that this resistance here around 56, 560 kobo or 7 or 6 naira above it. But I believe that with the Q1 we have seen, I know the focus for the jobs released now to the market, and seeing the half year result that will come with them into the dividend, I think investors should take advantage of this pullback we are seeing the stock to position. On this note, I'll say thank you. See you on Friday, hopefully by God grace. Our time is spent. They will give me a sign here. Thank you for your time. Bye.